Welcome to Alpha Recap, your end-of-day market briefing from stockalpha.ai. Markets were closed for the President's Day holiday, but there was a lot packed into the session leading up to the long weekend. As always, if you have questions, you can reach us at stockalpha.ai. Let's dive in.
Thanks. Glad to be here. It's one of those days where governance headlines and positioning moves really intersected with market action, and the market reaction set up a potentially bumpy open when trading resumes on Tuesday.
So, what really stands out here is the combination of a governance story and clear signs of elevated positioning in some marquee names, right?
Exactly. You had a structural announcement out of Munich, a cross-border trusted tech alliance, and then, on the same day, a high-profile copyright dispute between a big entertainment company and a major platform over AI-generated videos. And on the market front, we saw heavy volume and a pullback in a name that often sets the tone for the whole sector.
Let's start with the market action. You want to walk us through the key movers and why traders were on edge?
Sure, the headline was a roughly 2% drop in NVIDIA heading into the holiday. It finished the day down about 2% to around $183 on very heavy volume. That matters because that stock often sets short-term sentiment for semiconductors and broader tech.
And at the same time, some leveraged inverse funds showed big flows. Which way did those move?
Interestingly, the levered inverse funds in small caps and semiconductors actually fell as well. The small cap inverse fund fell about 4% to roughly $6.12, and the semiconductor inverse fund fell about 2.5% to around $1.76. Heavy trading in those names suggests traders were closing hedges or reshuffling positions ahead of the long weekend.
So on one hand, did the decline in the inverse funds imply more risk appetite? But then NVIDIA was down. Kind of a mixed signal.
Right. And the other thing is, it's nuanced. When inverse funds drop, it can mean people were buying riskier assets or covering shorts, which is a sign of risk on. But the pullback in NVIDIA complicates that interpretation. It could mean rotation away from single-name concentration into broader small-cap exposure, or simply that some traders closed protection before a holiday. The net effect is elevated potential for gaps and quick reversals when the market reopened on Tuesday.
So traders should have been watching opening prints for those names when markets reopened. Volume would be the confirmation signal.
Exactly. If you saw follow-through in the same direction with high volume, that would confirm momentum. If volume was light and prices bounced, that suggests short-term noise and position squaring. Either way, execution risk and slippage were higher because of the heavy pre-holiday activity.
Quick reaction? Wow, that's a lot.
Yeah, that tracks.
Shifting gears to the governance and trust angle, the Munich announcement was a headline grabber. What was announced, and why does it matter to markets?
15 firms from 10 countries announced a trusted tech alliance at the Munich Security Conference. The coalition pledged to cooperate on shared trust standards for technology procurement and supply. This is structural. Governments and large buyers are increasingly demanding demonstrable security and trust, and a formal alliance like this can change procurement dynamics.
So, to put it simply, suppliers that meet those standards could win more government and corporate contracts.
That's the short version. If the alliance leads to common certification programs or specific criteria in requests for proposals, vendors that check those boxes would have preferential access. That can re-rate cybersecurity vendors, trusted infrastructure providers, and even some cloud partners once the membership list and certification details are published.
And there were also corporate moves that tie into this theme. 3M named a new head of government affairs. Why is that notable?
Companies are realizing regulatory engagement is a core business function, not just PR. The appointment of a senior government affairs lead signals 3M is prioritizing its regulatory posture and public procurement relationships. That can affect litigation strategy and long-term revenue, especially for firms with government exposure.
Not what anyone expected.
Honestly, I was a bit surprised by how quickly governance became a competitive lever across so many sectors. It's no longer only about product features.
Let's talk about the ByteDance and Disney episode. Big IP and AI implications. Give listeners the setup and why this could be precedent-setting.
Disney sent a cease and desist after AI-generated videos used Disney intellectual property on a platform tool, and the platform pledged tougher IP controls. That's a flashpoint. If rights holders successfully force platforms to remove or restrict unauthorized content, we could see rapid changes in moderation policies, licensing frameworks, and possibly rules that impose more responsibilities on platforms.
Right, and that means media companies and ad-driven platforms could be exposed to sudden legal or revenue risk.
Exactly. If Disney files suit or reaches a settlement that creates clear precedent, that could be a material event for media names and for tech platforms relying on user-generated AI content. Markets would likely price in higher compliance costs and the need for licensing or moderation tech.
And this connects back to the Trusted Tech Alliance. How?
Both stories show a shift from pure product competition to compliance and trust as commercial differentiators. Whether it's cross-border trust standards or enforceable IP controls on generative AI, governance can become a moat or a liability, depending on how companies adapt.
Short reaction. Good point.
Right.
Okay, healthcare and devices. Some regulatory wins and clinical validation popped up in the briefs. Walk us through the takeaways there.
Bio-Techne secured CE-IVD marking for its Ella platform, which clears the way for sales across the European Union. That opens diagnostic and clinical lab channels and could accelerate recurring consumable revenue if adoption follows. Separately, PCure reported the first prospective clinical results for a gantryless upright proton therapy system showing feasibility and early efficacy, a de-risking event for that technology.
So for investors, the practical questions are about adoption cadence, pricing, and consumable attach rates for Bio-Techne, and publication and reimbursement for PCure.
Exactly. CE-IVD is a commercial inflection point, but you need durable adoption to translate into material revenue. And for novel therapy hardware, follow-on peer-reviewed data and clear reimbursement pathways are the things that unlock bigger commercial value.
And on the corporate events front, Carbon promoted a long-time R&D leader to CTO, and GoDaddy's CFO is scheduled to present at a conference on March 2nd. Why do these matter to investors?
Leadership continuity, like an internal CTO promotion, signals steady R&D execution and lowers execution risk for product roadmaps. Conference presentations, like GoDaddy's CFO on March 2nd, create catalyst windows. Any commentary on margins, M&A, or platform monetization could move the stock.
Right. And 3M's government affairs hire sits in the same bucket as a governance pivot.
Exactly. Together, these moves underline how corporate strategy is increasingly tied to policy and regulatory positioning.
Let's pull all this together. Patterns and trends you want listeners to remember.
There are 4 patterns to watch. First, governance as competitive advantage. Trust and compliance are becoming strategic levers. Second, elevated positioning and volatility ahead of holidays. Heavy pre-holiday volume and marquee names raises the chance of big opening gaps. Third, de-risking in healthcare is proceeding through steady regulatory and clinical milestones rather than one-off breakthroughs. And fourth, AI friction is normalizing. Platforms will increasingly build enforceable controls, and rights holders will push for precedent.
So the bottom line for listeners, what's the practical guidance?
Position sizing and execution should account for 2 things: the structural shifts that could re-rate entire subsectors over time, and the near-term operational risk of volatile opens. For short-term traders, monitor volume and opening prints for the names we discussed. For longer-term investors, track how trust standards, certification programs, and legal outcomes unfold. Those will determine winners and losers over months and years.
Quick rapid-fire recap. Hit the bullets with me.
Trusted Tech Alliance. 15 firms across 10 countries announced cooperation in Munich. Watch membership and certification details. ByteDance pledged new IP controls after the Disney complaint. This could set precedent for AI content. NVIDIA finished the day down about 2% to roughly $183 on heavy volume, short-term momentum test. The small cap inverse fund fell about 4% to roughly $6.12, and the semiconductor inverse fund fell about 2.5% to around $1.76, both on heavy turnover. Bio-Techne's Ella platform got CE-IVD marking for EU sales. PCure reported early prospective clinical results for its proton therapy system. 3M named a new senior government affairs lead. Carbon promoted a longtime R&D executive to CTO. And GoDaddy's CFO will present at the Morgan Stanley TMT conference on March 2nd.
Thanks. That's a great checklist. Any final thoughts before we sign off?
Just this. Markets were at the intersection of governance and volatility today. Structural developments like trust coalitions and AI IP enforcement will shape winners over the long run. But heavy pre-holiday positioning made the near term feel choppier. Keep an eye on opening volume and any legal filings or certification details. They were the most likely catalysts.
Yeah, absolutely. And one last short reaction. Stay nimble. All right, clear takeaways. First, watch opening prints and volume for the names we called out. Second, treat governance and trust developments as real strategic catalysts for specific sectors. Third, in healthcare, look for adoption and reimbursement signals to confirm commercial value. And fourth, follow any legal developments from the ByteDance and Disney interaction. Precedent there could ripple through media and platform stocks.
And remember, position sizing and execution plans matter just as much as the directional call when volatility is elevated.
That's it for today's Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening.